Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, hopefully you were able to join us last week for the weekly market report that went out on Friday and capture some of the screenshots that I suggested you do so you could have the evidence in hand to see how accurate the technical signals have been week after week. Now this is a one-year daily chart of the diamonds, which is the Dow Jones Industrial Average ETF, and I left my lines on the chart from last week so you can see again how accurate the forecast was. This is the line. I'll zoom in a little bit more. This is the line that I drew last Friday saying that my prediction was going to be for an up market this week and a possible turning point once we reach this resistance area. Now this is exactly what happened. We had Monday, Tuesday, Wednesday, Thursday, Friday. Monday was a spinning top. Tuesday we gapped up. Wednesday we gapped up again, and now we're starting to see the telltale signs of a pivot point. What does that mean? Well, we see on Thursday, which is the 26th, we see a lower high followed by Friday's high that is lower from the previous high. So right here you see a series of lower highs. That's number one. Number two, we see a drop in volume. So now that you can see how accurate the forecast was, let me erase all my lines, and then once I start drawing the lines for my forecast next week, hopefully you'll be able to get a screenshot and look at, again, how accurate the predictions really are. This is the resistance high that I think we're going to test for next week. So there is a chance that we can go a little bit higher to retest that, and then I think we're going to come right down, just like this, to fill the gaps. This is gap number one, that's gap number two. So I think we'll try to go a little bit higher initially, Tuesday, Wednesday, Thursday. Remember, Tuesday is the first day of the trading week next week because Monday is Memorial Day holiday. The markets are closed. So it's going to be a short and very accelerated move that I think is going to happen coming next week. This high right here, taken from May 10th, will be the resistance high that I believe will hold. So there's my forecast for the diamonds. Now let's go to the spiders, ticker symbol SPY, which is the S&P 500 ETF. Again, my lines are in place from last week. There they are, right there. You can see I said that we would pull back a little bit initially. We did with a lower high on Monday. So we pulled back, and then I said we would storm up to have this as the resistance target. That's exactly where we wound up. On Wednesday we hit the target. We went a little bit higher, and again, look at the volume drop. The volume is dropping on the way up, which tells us that the buyers are weakening. So again, just like I did with the Dow, I'm going to erase these lines right here, remove all lines, and then I'm going to redraw the lines for my forecast next week. Here we go, starting with that high. That's the high that I'm going to draw from April 20th. I'm going to project out to the right, and I think that's where we're going to bump our heads against for resistance. So I think we're going to go a little bit higher, just like that, and then I think we're going to pull back, just like that. So there's my forecast. Again, you might be saying, well, how do you know that angle, AJ? There we go. We have this angle is very similar to what we saw in this pullback. So if I were to draw a line from here to here, you'll see that from that high to that low, there's your parallel line. That's how I draw my angles each and every week. So there's your lesson on how to draw trend lines. Again, there's a small gap below the market here, and there's a gap down here. Eventually, I think those gaps will fill. Whether or not it's next week, I couldn't tell you because we have to see an acceleration of volume on the way down. So again, take your snapshot right there. 1, 2, 3, capture it. Save it for next week's forecast so you can see whether or not my predictions are accurate. They have been each and every week, and my goal is to actually prove this to you through the evidence that you're collecting right now. So again, take that screenshot and then get back with me next week as you look at the market report. Now, if you look at the Qs, QQQ, this is the NASDAQ market. Again, I've left my lines on the chart from last week's report, and you can see I said on Friday that we would go up. We did. Look, we went up as the volume was increasing. Isn't that interesting? The volume picked up as we went higher, but now as the market is moving up, the volume is dropping. What does that mean? That's a weakening move on the buy side with a small, very minute gap right here. So I'm going to erase all my lines again for the NASDAQ. I'm going to redraw my predictions for next week. Let me back up a little bit so you can see that. This gap is filling right here. So once we test this resistance line, this one's a little bit different. I don't know if we're even going to go up any more than we are, but I'm going to put a little bit of an uplift right there, and I think we're going to come right back down just like that. I think you're going to even see an acceleration of volume. Let's go so far as to predict the volume move as well. Again, take a snapshot. Let me back up a little bit so you can get a better shot of that. Take a screenshot. You can copy it. You can freeze the video right now. Do whatever you want to capture that picture. File it. Save it. Compare it to next week's report, and you'll see, I think we'll move up just a little bit. This gap will fill. As soon as that gap fills, I think we're going to be on our way down with accelerated volume as the sellers start to take a hold of our market. Finally, the Russell 2000. My projection was that we would move up. We did exactly that. Now, the Russell 2000 on the RUT, they don't show the volume. So here's my projection. You can see, if you captured the screen last week, you'll know that that's exactly what I said would happen. It did. This is one index after the other. I'm forecasting with great accuracy. Hopefully you're seeing that. And then even better than that, I hope you can forecast yourself as you learn from the market guys and how to read these charts. It's not rocket science. It's learning how to read the technical signals and the candle patterns as compared to volume. So I'm going to erase these lines right here, right there. Just remove all lines. And I'm going to redraw my resistance line. I think we're going to bump our heads again with maybe a doji. It might even be a spinning top. Again, I know I'm going out on a limb here, but I think we're going to move up just a little bit. And then I think we're going to come down in just this angle right here, just like that. See these angles back here? They kind of run parallel to what I just drew. There's your snapshot. Take a screenshot right there. 1, 2, 3. Save it, file it, make a folder, whatever you like. Label them. This is a learning experience for you, and hopefully you're going to get as accurate as what I'm doing here. If you're a student of the market, guys, you should eventually develop a percentage of accuracy in the low 70s, 70 to 75%. Right now, our percentage of accuracy is now approaching over 90%, which is the best in the world. No one has a better record for forecasting the market than what you're seeing right here. And again, I invite people to show me their records. If they think they have better than 90%, please show me your records, show me your trading activity, show me your recordings, and let's put our heads together, because as a team of forecasters, no one will be able to beat us. And that's why I love really meeting those people who have high and very strong percentages of forecasting so we can all come together. Now finally, the VIX. That's ticker symbol VIX. This is the volatility index. It basically measures volatility for the S&P. My forecast was, again, spot on. I said the VIX would go down. Look at that. There's my forecast from Friday. It's Monday, Tuesday, Wednesday, Thursday, Friday, all red candles. I said that we would move down to test this support level, and we have done that. Now, I'm not going to erase all lines. I'm just going to erase that one line that I drew last week, which was down, because I think the VIX is going to start to move up, just like that. I think we're going to get a bounce off of support. I think we're going to see an end to this long stretch of red candles. I think we're going to start seeing green candles right here. And remember, the VIX is contrarian indicator to the S&P. So as the VIX moves up, what does that mean for the S&P? That's bearish for the S&P. But we already went over that. Now, if you're interested in learning more, go to themarketguys.com, click on our website, and go to the video tab. You will see a library of what we call market shots. They're very short videos that teach you some of the things that we're talking about right here. and role reversal and gaps and everything else. And that way it'll help you understand the language that we talk here so that you can become more efficient and increasing your percentage of accuracy with regard to forecasting the market. This is A.J. Monty, again with the Market Guys. Thank you so much for joining us. Have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.